Hello, welcome to the Financial Freedom Guide channel. Here you'll learn how to improve your personal finances and achieve the much desired financial freedom. In today's video, we'll discuss how to increase your credit score in 2024 and improve your financial health. Don't forget to subscribe to the channel, like this video, and hit the notification bell to receive updates on our latest videos. What is a credit score? A credit score is a number that lenders use to assess the likelihood of you repaying your debts on time. It's a critical factor in determining your financial health. A good score can mean better interest rates, more credit options, and even benefits like easier approval for rentals or lower insurance premiums. Why is a good credit score important? A good credit score can save you thousands of dollars in interest over your lifetime, increase your chances of being approved for loans and credit cards, help you secure better terms on loans such as lower interest rates and higher credit limits, influence your ability to rent an apartment or get a job, as some landlords and employers check credit scores, lower your car and home insurance premiums. How is a credit score calculated? Credit scores are calculated using several factors, including 1. Payment history, 35%, consistently paying your bills on time. 2. Credit utilization, 30%, the amount of credit you're using compared to your credit limit. 3. Length of credit history, 15%, how long your credit accounts have been open. 4. Credit mix, 10%. Having a variety of credit types such as credit cards, mortgages, and personal loans. 5. New credit, 10%. The number of recently opened credit accounts and hard inquiries. Understanding credit score ranges: excellent, 750 and above. You'll likely receive the best rates and terms. Good, 700 to 749. You're viewed as a low-risk borrower. Fair, 650 to 699. You may have some credit challenges, but can still obtain credit. Poor, below 650. You may face higher interest rates and have difficulty obtaining credit. How to improve your credit score? Paying bills on time is crucial. Set reminders or automate your payments to avoid delays. Each timely payment helps improve your score. Practical example: imagine you have a credit card with a $1,000 limit and a $500 balance. Paying this balance on time not only avoids interest, but also improves your score. Reduce outstanding balances. Keep your credit usage below 30% of your available limit. If your limit is $1,000, try to keep the balance below $300. Strategy: debt consolidation can be a good option to reduce outstanding balances and simplify payments. Limit new credit requests. Avoid opening multiple new accounts in a short period. Each new application can temporarily lower your score. Keep old accounts open. The length of your credit history positively contributes to your score. Don't close old accounts unnecessarily. Diversify types of credit. Having a mix of credit types, such as credit cards, personal loans, and mortgages, can improve your score. How to obtain and monitor your credit report. You can request a free annual credit report from major bureaus like Experian, Equifax, and TransUnion. Review and dispute errors. Review your report for errors and dispute any incorrect information to ensure your score accurately reflects your financial history. Monitoring tools. Use apps like Credit Karma or Experian to regularly monitor your score and receive alerts about changes. Additional tips to maintain a good score. Avoid closing credit accounts. Closing accounts can increase your credit utilization rate. Keep them open, especially the oldest ones. Financial planning. Create a monthly budget to manage your expenses and ensure you can pay all bills on time. Payment automation. Use automation to ensure your bills are paid on time, avoiding late fees and interest charges. To give you a real-world perspective, let me share a couple of stories. John had a credit score of 620 and struggled to get a mortgage. By following these steps, he increased his score to 750 in just 1 year, saving thousands on his home loan. Emily always paid her bills on time, but had a high credit utilization rate. By reducing her balances and keeping old accounts open, she improved her score from 680 to 730 in 6 months. Now let's move on to the most frequently asked questions I receive. How long does it take to improve my credit score? Improving your credit score is a gradual process. It can take several months to see significant changes, especially if you're addressing major issues like high balances or late payments. Will checking my own credit score lower it? No, checking your own credit score is considered a soft inquiry and does not affect your score. Only hard inquiries, such as those made by lenders when you apply for core credit, can lower your score. Can paying off a collection account improve my score? Yes, paying off a collection account can improve your score, but it may not be immediate. The account will still show on your report, but its impact will lessen over time. Today we discussed how to improve your credit score and maintain good financial health in 2024. Remember, paying bills on time, reducing debt, and monitoring your credit are essential steps. If you enjoyed this video, share it with your friends and leave a comment below with your questions or experiences with credit scores. Before you go, we have an exclusive offer for you. Our ebook, Master Your Finances and Succeed in Business, The Complete Guide, is a comprehensive resource packed with strategies and knowledge to help you take control of your finances and achieve business success. Investing in this guide could be the game changer you need. Click the link in the description to purchase your copy today and start your journey to financial freedom. Thanks for watching. Remember, financial freedom is within your reach. See you next time, and until then, keep striving for financial independence and success. Financial Freedom Guide, your path to prosperity.